Welcome everyone to HueFin News. Today is October 14, 2018, and this is another article that we're going to correlate with the price charts to make sure that what we're reading is in fact what is on the charts. If this is your first time coming to this particular channel, go ahead and like and subscribe to this video. Go ahead and like and subscribe to this channel. And if you got a comment about Tesla, then go ahead and leave us a comment as well, because we definitely would like to know what you all have to say about this particular company. So now this article is about Tesla and its money issues that this company is having. As you all can probably read, the title for this article is Tesla needs over $1 billion in cash over the next 6 months, and Wall Street is going nuts trying to figure out where it's going to come from. This article was written by Lynette Lopez, and as we continue to scroll down, there's just some things I just want to highlight about how negative it looks for Tesla and how we're forecasting this particular company to crash. The stock is going to crash according to this article, and we're going to look at the price charts to see if Tesla is going to crash as well from what we see on the price charts. Now, as we continue to scroll down, you can see here as the analysis portion, Tesla has around $1 billion in debt coming due over the next 6 months. And right now, it doesn't have the cash to pay for the debt to keep the operation of the business ongoing. Now, a lot of people are asking, where is Tesla going to get the money from? Because apparently Elon Musk does not want to go to the public to ask or raise the money in order to pay the debt that this company has. Tesla could survive another close call using energy credits and some more financial engineering. That just tells you that there's some things that we do not understand what financial engineering is all about, but apparently they have some way, some system of how they can do it. And the last thing that a lot of the optimistic people are saying is that it could turn a profit in this year, Q4. And now I'm going to go ahead and highlight some of the negative things as to why we're stating that the stock for Tesla is going to crash. Now, remember, Tesla up until now is still a profitless public company. They haven't made a profit ever since its existence. The company has about $11 billion in long-term debt, trying to scale and survive in a capital-intensive industry where margins are thin. So now, Tesla's not making any money. The company as well is trying to renegotiate more favorable payment schedules and or rebates with its suppliers and vendors. Now, in August of this year, there was 22 respondents that was questioned in a survey, and 18 out of the 22 of the auto parts industry said that Tesla was a danger to their own companies. That was according to the Wall Street Journal. At least one of them has gone broke waiting for Tesla to pay up. That again is negative. Another thing I want to point out is that Tesla has about a dozen mechanic liens against that company in Alameda County, California, home of the company's Fremont, California factory. That's negative as well. June 30th, the company total current liabilities was at $9.1 billion, and it literally collapses the assets of $6.7 billion. That means that $2.4 billion they are in the hole in order to try to come up with working capital. So they literally are broke as of right now. June 30th, Tesla was still holding about $2.4 billion in cash. 942 of that 2.4 billion are customer deposits for the new Model 3, which they're still waiting on, and Tesla has not produced yet. In November, the company needs to come out or pay out $230 for a convertible bond payment, and by the end of this year, it needs to have an additional $920 million in the bank to pay a loan due in March of 2019. It also has a small $157 million non-recourse loan that's due in December. So as you can tell, Tesla has a lot of debt that is forthcoming that they need to pay. And if they're already in the whole $2.4 billion in debt, then definitely they are running short on how to pay that amount. Now, the Tesla's $1.4 billion in cash shrinks down to just over $60 million cash if you take the Model 3 deposits away. Now, if you guys have heard about the asset test ratio, that's simply you take the company's current assets and you divide it by its liabilities. So when you look at Tesla's asset test, the ratio ends up being 0.20. This article tells you in 2008, right before it went bankrupt, GM, General Motors, asset test ratio was at 0.30. So again, Tesla is not giving us a lot of indication that this is a viable company, that is a good company to invest in. But for some reason, Tesla continues to shell out and continue to operate without making a profit. Moody as well downgraded Tesla's credit, saying that they need to raise capital to continue operations or either pay off its debt. It's estimated that Tesla would blow through $2 billion in cash through the year and remain cash flow negative through 2019. So literally a lot of negativity is being reflected on this particular article. So once we look at the price charts, we definitely need to see whether or not it is continuing to show us negativity. Now, despite Moody's dire predictions and Tesla's own disconnect between projections and profitability, Musk has said repeatedly through the year that he will not raise money. Other people say who are for Tesla says don't bet against Elon. As a matter of fact, Maynard and Tim Liu have just initiated coverage of the company, setting a price target of $430. So there's still some people who are in Tesla's camp, still seeing interest to the upside on the price of the stock. And as you all can see, that $258 was the last trade price. So it's quite a way away from what this price target is for these two individuals who just initiated coverage for this company. So now let's go ahead and look at the price chart to see whether or not these two analysts are correct in their presumptions as to what they expect Tesla stock to do. So this is the weekly chart for Tesla. You all can still see here that we have been in a movement to the upside. Quite simple to see that this stock is showing us indications of higher prices. But as we zoom in on this weekly chart, we still are seeing numerous weeks to where the stock is weak. And as a matter of fact, I'm still indicating that this stock is still going to move to the downside. $240 definitely look like it's going to be the area of support. And matter of fact, last week it came all the way down to $247.77. I do not think that this company is done with moving to the downside. It can come all the way back down to this ascension line that we've drawn, and then we could see some movement to the upside. But as of right now, this chart continues to show us that weakness is still here. Still expecting Tesla to continue to move to the downside. So the negativity that's in that in this Business Insider article is still true. I will tow along with that article stating that the company is still poor and the stock should continue to move to the downside, even though we have seen two analysts that initiated coverage on this company. So looking at it on the daily price chart, you all can still see here how we have been consolidating. That's a very good thing in the near term, but the weakness is still being had in Tesla. I'm still expecting this stock to move to the downside. The chart definitely is in line with the article, so I will agree with the article. Our analysis is for Tesla to continue to move lower. It might come just down and hold support at $240 though. Okay, so what do you expect Tesla to do? Do you think that we're going to continue to move lower, or what about do you think it's going to continue to move to the upside? Whatever the case may be, leave us a comment in the comment section of this video. And if you like how we're able to correlate the price charts with the articles that we do, please go ahead and like and subscribe to this particular channel, like this video, and let us know your thoughts, because Tesla definitely shows us that it has more downside movement to go. So again, we do appreciate you all coming and watching this video. Make sure you all maintain your profitability, and I will see you all later.